Have you ever stared at your investment goals, that beautiful, ambitious portfolio you've meticulously crafted, and then felt that sinking feeling? The realization that it's all just numbers on a screen until you actually fund it? It's like having a race car in your garage, but no gas. You know it has potential, but you're stuck. You've got this incredible M1 finance account, ready to go, but the question lingers, how do you actually get your hard-earned money into it? If you've ever found yourself asking that, you're definitely not alone. It's a common hurdle, especially for those new to investing or even just new to the M1 platform. You've done the research, you've set up your pies, you've even considered the tax implications, but now, the rubber meets the road. It's time to fund your account, and you want to do it right. Let's break it down. Before we dive into the specifics of funding your M1 account, it's important to understand why funding it is so crucial. You see, an unfunded investment account is like a seed that never gets planted. It has the potential to grow, to blossom into something significant, but without the initial investment, it remains dormant. Think of it this way, M1 Finance is designed to help you build wealth through automated investing. You create a portfolio, or pie, that aligns with your financial goals, and then M1 automatically invests your money according to your chosen allocations. But this automation only works if there's money in the account. Funding your account is the first step towards turning your financial aspirations into reality. Now, let's get practical. How do you actually put money into your M1 account? There are a few key methods, each with its own advantages and considerations. The most common and straightforward way to fund your M1 account is through a linked bank account. This allows you to transfer funds electronically, quickly, and securely. Here's how it generally works. First, you'll need to link your bank account to your M1 Finance account. This usually involves providing your bank's routing number and account number. M1 Finance uses secure third-party services to verify your bank account, ensuring the safety of your financial information. This is a standard practice in the financial industry, so there's no need to be alarmed. Once your bank account is linked, you can initiate a transfer. You'll typically have the option to make a one-time transfer or set up recurring transfers. Recurring transfers are particularly useful for dollar-cost averaging, a strategy that involves investing a fixed amount of money at regular intervals. This helps to smooth out the impact of market volatility and can lead to better long-term returns. When initiating a transfer, you'll need to specify the amount you want to transfer. M1 Finance may have minimum transfer amounts, so be sure to check the platform's guidelines. You'll also need to select the account within M1 Finance that you want to fund. If you have multiple pies or accounts, make sure you're depositing into the correct one. Another important consideration is the processing time. Transfers typically take a few business days to complete. So, if you're planning to invest immediately, keep this time frame in mind. Now, let's talk about the different types of accounts within M1 that you might fund. M1 offers various account types, including individual brokerage accounts, joint accounts, and retirement accounts like IRAs. Each account type has its own rules and regulations, so it's important to understand the specifics of the account you're funding. For example, if you're funding a Roth IRA, you'll need to adhere to annual contribution limits and income restrictions. Understanding these limitations is crucial to avoid penalties. If you're funding a taxable brokerage account, you'll need to be aware of the tax implications of your investments. Capital gains and dividends are taxable events, so it's essential to keep accurate records and consult with a tax professional if needed. Beyond linking a bank account, some platforms, including M1, may offer other funding options. For instance, some platforms allow you to transfer funds from other brokerage accounts. This can be useful if you're consolidating your investments or moving assets from another platform. Furthermore, some platforms may also allow for wire transfers. While less common for everyday funding, wire transfers can be useful for large sums of money or when you need to transfer funds quickly. However, wire transfers often come with fees, so it's important to weigh the costs and benefits. Now, let's address some common questions and concerns related to funding your M1 account. One frequent question is about the security of linking a bank account. As mentioned earlier, M1 Finance uses secure third-party services to verify and protect your financial information. These services employ encryption and other security measures to safeguard your data. Another common concern is about fees. M1 Finance is known for its low-cost structure, but it's always a good idea to review the platform's fee schedule. While funding your account through a linked bank account is generally free, other methods, like wire transfers, may incur fees. It's also important to be aware of any potential transfer limits or restrictions. M1 Finance may have daily or monthly transfer limits, so be sure to check the platform's guidelines. Beyond the mechanics of funding your account, let's talk about the strategy behind it. How much should you fund your M1 account? The answer to this question depends on your individual financial goals and circumstances. If you're just starting out, you might want to begin with a small amount and gradually increase your contributions over time. This allows you to get comfortable with the platform and the investing process. If you have a specific financial goal, like saving for retirement or a down payment on a house, you'll need to calculate how much you need to save each month to reach your goal. Remember, consistency is key. Regular contributions, even small ones, can add up over time. Dollar cost averaging, as mentioned earlier, can be a powerful tool for building wealth. Another important aspect of funding your M1 account is reviewing your portfolio regularly. As your financial goals and circumstances change, you may need to adjust your investment strategy. This might involve reallocating your assets or changing your contribution amounts. M1 Finance's pie-based investing system makes it easy to adjust your portfolio allocations. You can simply update your pie to reflect your new investment strategy. Finally, let's talk about the emotional aspect of funding your investment account. Investing can be an emotional roller coaster, especially during periods of market volatility. It's important to stay disciplined and stick to your long-term investment plan. Don't let short-term market fluctuations derail your financial goals. Remember, investing is a marathon, not a sprint. So, to recap, funding your M1 account is a crucial step towards achieving your financial goals. By linking your bank account, setting up recurring transfers, and understanding the different account types, you can effectively fund your account and start building wealth. Remember to consider your individual financial goals, review your portfolio regularly, and stay disciplined. With that said, thanks for watching, and until next time.